Okay, so let's get right into it. If you've recently paid for dental implants, you could be sitting on a massive tax deduction. But here's the thing, getting it means you have to be ready for a pretty intense look from the IRS. Think of this as your secret weapon, your playbook for winning that tax audit. We're going to break down the exact strategy to turn what was a huge expense into a totally legitimate audit-proof write-off.
First, let's be real about the numbers here. We are not talking about a simple teeth cleaning. A full arch dental restoration, which is the modern gold standard for replacing teeth, can easily run you over $50,000. For a lot of people, that's a huge financial hit. So being able to deduct this isn't just a nice little bonus. It's absolutely crucial for making this essential healthcare affordable.
And that, of course, brings us to the $50,000 question. After shelling out a fortune to get back your ability to eat and just live a normal life, can you get any of that money back from your taxes? The answer is a resounding yes. But there's a catch, a big one.
And here it is. I call it the Cosmetic Trap. If an IRS auditor looks at your case and decides it was primarily to improve your appearance, a smile makeover, your entire deduction can be thrown out. That could leave you on the hook for back taxes, penalties, the whole shebang. This is the single biggest obstacle we need to clear.
So, to beat this trap, we have to understand the rulebook, the tax code itself. And here's something you absolutely need to know. The rules your insurance company plays by to deny your claim have nothing to do with the rules the IRS has to follow. We're about to decode the actual law.
The law basically draws a line in the sand. On one side, you have deductible medical care. This is stuff that treats a disease or affects how your body is structured or functions. On the other side, you have non-deductible cosmetic surgery, which is all about appearance. Our entire strategy, our whole game plan, is to prove that dental implants belong squarely in that first column.
And if we look at the actual legal definition from the tax code, you'll see there are two ways to qualify. It could be for treating a disease, sure, or, and this is the important part, it can be for the purpose of affecting any structure or function of the body. That second piece, the structure or function part, that's our golden ticket. That's our main line of attack.
Now, let's talk about a huge mistake people make. Your insurance company sends you a letter and it calls your implants cosmetic as a reason to deny your claim. Whatever you do, do not fall for this trap. Their goal is to save money, plain and simple. It's based on their private contract. The IRS, on the other hand, is bound by federal tax law, and the law cares about medical function, not an insurance company's profits. They are two totally separate worlds.
And get this, the tax code even gives us a powerful exception to their own rule. A procedure is not considered cosmetic if it's fixing a deformity that came from a disfiguring disease. This is a critical piece of the argument. It means if we can show that tooth floss leads to a real physical deformity, we have a case that's almost impossible to deny.
So we have the legal argument, now we need to back it up with science. To win an audit, you have to change the conversation entirely. We're going to stop talking about teeth and start talking about biology. We're building an evidence-based case that proves your surgery was a medical necessity, not some vanity project.
This is really the core question you have to answer for the IRS. It's not about wanting a prettier smile. It's about fixing something that was fundamentally broken. And the proof isn't in a before and after picture. It's in the x-rays of your skeleton.
Okay, the key medical term here is mandibular atrophy. This isn't just fancy doctor speak. It's the actual diagnosis for jawbone loss. See, when you lose a tooth, the jawbone right underneath it just starts to dissolve. This is not a cosmetic issue. It's a degenerative physical defect. It's a structural failure of the skeletal system. You're not fixing a smile. You're literally stopping your skeleton from deteriorating.
And the consequences are a domino effect. It's way more than just a gap in your mouth. You end up with masticatory dysfunction. That means you can't chew your food properly. That leads to bad nutrition, digestive problems, all while the bone loss just keeps getting worse and worse, permanently changing the shape of your face. This is a cascade of serious medical problems. And this all leads us to a really powerful way to reframe the whole thing. An implant isn't just a fake tooth. It's a medical device. By fusing directly to the jawbone, it stops the bone loss in its tracks. It is, for all legal and medical purposes, a skeletal preservation device. That argument directly hits the affecting a structure of the body test from the tax code. This is your silver bullet.
Okay, so we've got the legal theory, we've got the biological evidence. Now let's make this real. Let's turn it into a playbook with the specific,
practical steps, and the exact documents you need to gather to make your tax deduction rock solid.
If you only remember one thing from this whole explainer, make it this. The Letter of Medical Necessity, or LMN, is the single most important document you will have. This letter from your surgeon is like the Rosetta Stone. It translates what you had done into the precise legal language the IRS needs to see.
The words you use here matter a lot. Your LMN needs to completely avoid cosmetic terms like smile makeover or aesthetic improvement. Instead, it has to use the forensic, medical language: mandibular atrophy, masticatory dysfunction, prosthetic reconstruction. You're treating edentulism, the clinical term for being toothless, not chasing a prettier smile.
The courts have also given us another fantastic tool. It's called the but-for test. You just have to prove that but for the medical condition, the tooth loss, the bone atrophy, you would not have spent $50,000 on this invasive surgery. I mean, let's be honest, nobody does this for fun. The expense was forced on you by the disease, and that's what makes it so different from a purely elective cosmetic procedure.
Now, proving the expense is medical is step one, but you also have to clear a math hurdle. You can only start deducting your qualified medical expenses once they add up to more than 7.5% of your adjusted gross income, or AGI. It's a threshold, a floor you have to get over before the deduction even kicks in. And this chart shows why timing is absolutely everything. That 7.5% floor resets every single year. So if you split the costs for your implant procedure across 2 different years, it can be a total disaster for your taxes. You might not hit the threshold in either year, and you end up with a big fat zero for a deduction. The strategy is to bunch all those costs into a single tax year to blow past that threshold and get the biggest write-off possible.
Bunching is something you have to plan. You work with your dentist office to get all the big-ticket items, the extractions, the grafts, the implant surgery, all on the calendar in the same year. Then you pile on. Prepay any other doctor bills you have, get new glasses, maybe buy those hearing aids you've been putting off. You consolidate everything into that one high medical expense year. Okay, let's pull all of this together. We've gone through the law, we've built the biological case, and we've laid out the financial strategy. Here is your final verdict, a simple checklist to make sure your deduction is a slam dunk.
Here it is, boiled down to 3 simple, essential steps. 1. Get that letter of medical necessity and make sure it uses the right forensic language. 2. Bunch your expenses into a single year to blow past that 7.5% AGI floor. And 3. Make sure all your documents prove you were treating a medical condition, bone loss, chewing problems, not just chasing a new look.
And if you're still a little worried that the IRS will ding you just because, hey, the implants do make you look better, here is the legal precedent that has your back. A famous tax court case basically established this critical idea. Any aesthetic benefit is irrelevant if the main reason for the procedure was to treat a disease. The fact that fixing your function also fixes your appearance doesn't disqualify. So, we end up right back where we started. Was this a cosmetic choice, or was it a structural necessity to save your skeleton and restore one of your body's most basic functions? By following this playbook, you're not just crossing your fingers and hoping for a deduction. You've got the law, you've got the science, and you've got the strategy to prove your case. Now you have the evidence